point is to have your investors, enter into a fear of missing out mode by, convincing them that your company is an outlier opportunity that they cannot miss. So VCs who have been in the game and have been through venture cycles understand that linear growth to success is rarer than finding unicorns themselves. So how did you prioritize and target investors, to approach as you prepared for each round of fundraise?
And the few important criteria, the first was value add. I think the second is more of a personality fit. We would not want somebody to be on the board who doesn't kind of believe in the way that we want to grow. And the third is something that you had touched upon, is VCs who are here for the long run. Because I think when things are going good, everything is good. But it's when the chips are down is when you want your investor to kind of be your guiding light.
In terms of investor pitch, can you share specific tips or pitfalls that you have avoided?
Well, definitely knowing who your audience is for the investor that you're meeting. So definitely, I agree, never get carried away with just focusing on your data tech or your data model solution and diving too deep and quickly into the technicalities. Definitely pitch to them what's your vision. How do you, more importantly, commercialize your product? I do believe that investors don't expect everything to be perfect. In fact, they expect flaws, but how do you actually really bounce back from that?
Let's talk about, in terms of mindset and, your deal negotiation strategy, what would be your priorities?
I think what works and what's worked for me over the years is being very clear as to what are the must-haves for us and what are the good-to-haves. But I think one tip for a lot of folks is what they may not know is that your first term sheet or the first legal agreement is the most important one. That becomes almost like a base for life.
What would be your advice for entrepreneurs in terms of managing new investors?
If you've chosen your investor correctly, then they got to be like a partner in the business. So good investors, take bad news into stride and work accordingly. I think that's one. The second is to always prepare for the next round.
How did you balance time and effort fundraising whilst keeping the business on track?
Starting your own company, your own business, it's always tough in the start. But I think you can always make your subsequent rounds a lot easier.
My advice to everybody is just make sure you have at least 1 to 2 more co-founders. I think it makes life a lot easier.
All VCs claim that they are smart money. How do you determine who really is smart?
Look at the history of the VC, the portfolio of companies that they have supported, exited successfully, currently supporting as well. I always look at the credentials of them, how many cycles of economic cycles that they've gone through.
I think for me, it would be slightly different, which is, evaluate the kind of questions that the investor is asking you when you are pitching to them.
What is really more important is how supportive these investors are and whether they have that attitude and the gumption to ride through that journey with you, and they have the capabilities to kind of work with the companies that they've invested in.